So there's a really big myth going around right now in the real estate industry, which is along the lines of that the real estate market has become cheaper. And I totally understand where this is coming from because there's a lot of hoopla on the news, which is mentioning a real estate crash and how prices have come down drastically from what they were earlier this year or even last year. And although there is truth to that, there is a lot of misinformation. And yes, prices have come down from what they were earlier this year and even late last year, but that doesn't mean that the monthly payments are any cheaper, because when we're buying real estate, for 90% of us, we're not buying cash, we're taking a mortgage. And so when you take a mortgage, there is two things to look at. One is the purchase price, the overall price that you buy the property at, and the second thing to look at is the monthly payment, because our purchase is really based off of how much can we afford on a monthly basis. And yes, we bought that house for $700,000. Realistically, the thing that we're looking at is how much are we paying on a monthly basis, which could be $2,500, just hypothetically. So like I said, there's a very big misconception going on right now saying that the real estate market has become so cheap just because prices have gone down. So what we're going to take a look at is what the mortgage would have been on a property at $700,000 earlier this year. And let's say that property that was selling for $700,000 came down to $500,000, what the monthly payment would look like now. So let's take a look at that. Okay, so as you guys can look at my screen right now, we're taking a look at two things. The first thing that we're going to take a look at is to see the mortgage amount of $700,000. So let's say you purchased the property and your loan amount is $700,000. Let's say this was in January of 2022. So that would put you around an interest rate of around 1.5% on a 25-year amortization and a monthly payment. So you're paying once every month on a 5-year term would leave you to $27.98 per month. Now, that doesn't include utilities, that doesn't include property taxes or insurance, that's just your mortgage amount. Now, let's take a look at that same property, and let's say it's sold for $500,000, or your loan amount now is looking around the lines of $500,000. So the interest rate going on right now hovers between 4.5 to 5.5, but we're going to take the median, which is 5%, and we're going to put a 25-year amortization on that, and we're going to do the same thing where it's a monthly payment on a 5-year term. And so if we can go down, you'd see that the monthly payment is actually $29.08. So it's almost $200 more than what it would have been if you purchased that same property earlier this year at a higher loan amount, which is very interesting because it's very misconceiving or misbelieving. But the reality of it is that yes, property prices have come down, but the monthly has gone up, and that's a big reason as to why they came down. When the banks qualify you, they really qualify you based on how much you can afford on a monthly basis. And right now, as you can see, there's a $200 difference in what you would have paid earlier this year and what you would have paid now on that same house that quote unquote went down in price. So as you saw in the previous slides, there is a big difference in monthly payment, and that's what we really focus on when we're purchasing a property, because unfortunately we're not purchasing it cash. Now, don't get me wrong, if you're purchasing a property cash right now, it is probably the best time because property values have come down and the monthly payment or interest rates don't really affect you. But if you're like 90 to 99% of us who need a mortgage, then it's all very relative. And what we've seen in the past is that when prices are high, interest rates tend to be fairly low. And when prices are fairly low, interest rates seem to be very high. So they're very correlative. And so it's very hard to see where the real estate market's going to go. We're probably going to go back to what we were in interest rates before COVID, which was a fixed rate was hovering, if I can remember correctly, around the 3% mark, which is pretty standard, like 3 to 3.2%. So we'll probably see another interest rate hike in the end of October. But then it's going to be very interesting to see what the Bank of Canada does in 2023 and how that will affect the real estate market as a whole. But at the end of the day, if you're purchasing a property based on your lifestyle, then there is never really a bad time to purchase a home, because what is your second option? Your second option is to rent a property, and renting in a time when interest rates are high, the rental tends to be high as well. Alright guys, I hope this video was informational and it made a lot of sense. My name is Zain. I have a team here in the Durham region called Next Group Real Estate. If you have any questions, please feel free to reach out. I would love to answer them.